Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is your favorite show, Daily Calls, a show that answers all your stock-related queries on the program. In case you're here for the first time, well, you can send in all the queries that you have regarding the stocks in your portfolio or onto your watch list on this WhatsApp number that's flashing on your screens. Top market experts will join in on the show and help you understand what should be your strategy on the stocks in your portfolio, whether you are stuck in wrong set of stocks or should you be building on to the right set of stocks to create more wealth going forward from here. Now, you can also do is that you can log on to our YouTube channel, go on to Business Today, then go to the Daily Calls Live, use the comment section there and write in your questions there too. I'll be happy to pick up some questions from there as well. But let me quickly first look at how the markets are trading at this point in time. We're nearing the half-time trade. Remember, we started off on a choppy note. We're still hovering around 25,076, so about a 90 point of a dip can be seen still. Now, apart from PSU banks that was holding into the green right from the morning trade, FMCG stocks have also built up some move on the positive end. 0.3% of a move on the higher side, but real estate has actually slipped quite a bit. It has in fact dropped to the low point of the day, now 2.4% lower, and you can see a sharp sell-off across the board. Even the IT stocks, they continue to drag, now a percent lower, and you see even the banks that are dragging under pressure at this point in time. But let's welcome our guest on board. Mr. Akshay Bhagwat is joining in, Senior Vice President of Derivatives Research at JM Financial, to share with us his views on the markets and, of course, to answer your queries. Akshay, warm welcome. Good afternoon to you. Help me understand your view on the markets. What do you think is consistently creating some pressure on the markets? You know, we were unsuccessful in going beyond 25,500 considerably, sustainably, and we are now seeing a pressure continue to now, build up on the markets, and we are now at the risk of losing that 25,000 mark yet again. What do you think is creating this fresh pressure?
Good afternoon, Sakshi. So yes, if you look at the journey of Nifty for the September month, it has been a good recovery rally, right from the levels of 24,500 odd levels. It is this week that there is some pressure being felt from the levels of 25,300. But I believe this is more of a regular market correction, and as the data reading goes, there is no serious concern about the future weakness if we were to speak about in the Nifty index, because now the festival season kicks in from the month of October. The consumption would pick up, and I think the GST has also helped to boost consumption to a great extent in the past few days. Geopolitical pressure is the only reason which where the markets do resist time to time, but overall my sense is that 24,800 from a broader perspective is a strong support zone in Nifty. That correction we are witnessing is temporary, and there should be buying demand once again near the levels of 25,000, and there is a good chance that Nifty should revisit levels of 25,650 in the due course of time.
Okay, fair point. Let me also now understand from you, Akshay, quickly, what do you think is behind this sharp sell-off in the real estate space? How are you looking at it?
For the real estate space, if you look at things have been a bit volatile lately in the real estate space. There has been some bit of a buying intent which we have seen, and the buying primarily was because majority of these names were a bit oversold on the technical parameters. Yes, if you were to look at this space from a medium-term perspective, still I do not see any price or volume traction which makes me believe that this sector is on a reversal mode. It is more in a range bound scenario where it gets into a sell pressure once it tests the resistance zone. In all likelihood, again, the selling is not done, still more to go from the short term perspective. And probably if you look at the Nifty reality index, which trades around 890 rupees, where we can track the entire reality space, the 860 is the possible downside. So more selling from short term perspective is yet to go in the real estate space.
Okay, fair point. I hope this has also given a broad understanding to all the viewers who are looking at this sharp sell-off, and of course how to view this in terms of an investment opportunity as well. Let me actually now look at all the questions that are coming in for you, Akshay. We have a lot of our viewers who are joining in on our YouTube channel already. We have Aarti, Dekpal Bhatia, we have Sandeep, We have Ankur, Shomalia, Jaya joining in, Anuj joining in. We also have Nancy joining in. Warm welcome to everybody who's joining in early. Most of our regular viewers are also with us right in the starting of the show. So welcome to everybody. First up, starting off with Aarti's question, she wants to know about Munjal Auto Industry and for a target of 1 month. So she has a trading view, and we've been seeing how the auto segment, including the auto ancillaries, have been consistently looking in high spirits as far as the GST boost is concerned. How are you looking at Munjal Auto?
Uh, See, definitely the auto space has been in the limelight. Auto ancillaries, all the stocks have sentimentally done well before the date of 22nd of September, from when the GST implementation kicks off. But from here on, if you look at the stock, the sentimental impact is already kicking, and since the time horizon is just a month, so I will have a slight limitation here because the prices are suggesting that possibly the stock might be confined in a range if your outlook is limited for a month. 100 is the resistance, and somewhere 90 is the short-term support base building up. Considering the run-up in this in the auto stocks, it's likely to be range-bound for a month. So if you can give this stock some more time, probably 3 months would do justice in terms of returns for you. So 85 it should be your stop loss, and 110 can be your possible target. But give this 3 months of holding for the targets to go as per the technical studies.
Okay, fair point. I hope this has also helped you out, Aarti. Next, we have Mr. Bhatia writing in. He wants to know a long-term view, Akshay, on Inger Sol Rand. How are you looking at this stock as well? Do you think there is some kind of a tide that's turning here and the stock is getting into a momentum?
See, longer term, definitely it will take some more time for the stock
Okay.
to achieve its longer term targets. But because the stock has already been in a corrective phase on the longer term charts, last few months have seen good recovery from the levels of 3250. Somewhere it's consolidating, trying to gather its lost momentum. So really, the way the entire chart study shows at the current juncture, it will take some more time, probably minimum 1 year plus investment horizon is what you should look for. And in case you are more committed from this time frame, I think 4750, which is the all swing highs or almost near the all time highs, should be the first target you can look forward to.
Okay, fair point. Let's also look at some of the other key questions coming in now. We have the next question. In fact, we have some WhatsApp viewers also joining in. Nancy from Chandigarh writes in, says, good afternoon. I want to know about two stocks, Aadhar Housing Finance and Aditya Birla Capital. Which one is something that you can buy right now for better profits in the short term? So completely different sectors to look at here. Aditya Birla Capital and Aadhar Housing Finance. How would you look at it? One is focused on housing, and Aditya Birla Capital has a diversified portfolio there.
So, first of all, based on the technical price readings, both the charts are in a healthy uptrend. Now, if a choice has to be made as to which one is better among the two,
Yeah.
I would rate Aditya Birla Capital as the first choice, based completely on the price and the volume action. The stock is almost at its life highs. The volumes are great. It is trying to break out of a range consolidation. And from a short term trading perspective, 285 is the short term support base which is set. So your stop losses should be below 280. And you can look forward for possible targets till around 325.
Okay, got that. I hope this has answered both your questions there. Next, we have this question from Sandeep Pancharia, wants to know about Vishnu Prakash R. Pungalia. The stock is priced at 100 odd levels, and he actually bought it at 253. So he's actually looking at a sharp loss on the stock right now, Akshay, even though he has mentioned that please let me know how do I recover my loss, should I hold or exit, and how do I cover up my loss now?
Uh, so, look, technically, this the trend is weak, and if you look at the last few days, I think it's been 8 or 10 straight sessions that the stock has been falling one way. Even in the last, I think, 7 8 months, you can almost say that it's been a vertical fall in the stock. So clearly, the prices are not suggestive of buying or trying to do bottom fishing. And in case, as the viewer has already been committed to the stock and taking a decision as to what next has to be done. The idea is to take an exit because the volumes or any kind of studies are not suggesting that there will be any V-shaped recovery. Yes, you might have some trading bounce backs here and there in wake of oversold parameters, but we are not looking to time and try to get out on those small recoveries. So clearly the suggestion is exit and get invested in a stock where the returns can be faster. The momentum is chasing the auto names, the financial services space. So you can watch this space in case you want to recover your the losses which you have incurred in Vishnu Prakash.
Okay, fair point. Let's take the next one. We have this question coming in from Shomalia Biswas. He's from Kolkata, and actually he says he holds 10 lots of Nifty for 30th September expiry, 25,300 call option, and at the rate of 55. He wants to know a suitable target and a stop loss that you can guide him with, especially when the tide is turning weaker for the Nifty.
Yes. So it all depends, where you have bought the Nifty because last few days there has been some pressure in the market. We are nearing a support zone, and as I mentioned in my opening comments, the downside probably looks capped if you were to look at Nifty from the next weekly perspective. 25,000 is the support. I'm anticipating a recovery in Nifty from the current levels, and if it does on the expected lines, my possible target should be around 25,300 to 350 zone. So yes, yeah, 25,300 is deep out of the money call. We are not. You are already committed to the trade, and you have to now look for an appropriate exit. So the thought is till this Friday. You are holding the trade because options are time sensitive products, and if by Friday Nifty hits 25 200 250 zone, that is the time when you should consider an exit. Even if it doesn't, that is whatever the case may be, you should close your trade by this coming Friday.
Okay, fair point. Let's take some questions from our WhatsApp then. We have this question now coming in from Karthik. He's from Hyderabad. He says, I hold 500 shares of Elecon Engineering and at an average price of 653 and would want to know whether he can continue to hold or sell his stock. He's also sitting on losses at this point in time, but he's looking for your expert suggestion as to how to come out of it. Elecon Engineering for you, Akshay.
Yeah. So look, from a longer term perspective, this chart has been confined in a trading range. Now, this range is pretty big because we're talking long term, and really, the best way to try to minimize your losses or to get back in a profitable situation is to average out. Because if the longer term price charts have to be studied, still the charts are not weak. It is just the 1.5 year version of the chart reading which shows a range bound trading. So what my anticipation is that there is a resistance building at 680 and somewhere a support zone is around 475, 480. So you can look to average out. The range to average is from levels of 560 to levels of 480. And with an investment time frame of over 1 year, you can look forward for targets of 800 plus where you can consider booking out your profit. Worst case scenarios, keep a stop loss below 390.
Fair point. Let's take the next one then. This one is from Mohan. He's from Bengaluru. He says Navratri wishes to everybody and the entire team of Business Today television team. Thank you so much, Mohan, for your warm wishes. We wish you and your family and your loved ones as well a great Navratri and a festive season ahead as well. The question that he has is on the auto stocks. He says the auto stocks have already run up quite a bit in the last 1 month, and I want to know if there is more steam left. I'm sitting on a 60% profit on TVS Motors. So should I now consider booking out at least partially? Although I'm not in a hurry, but I would still like to know what exactly is a better way to approach it. That's a valid question. That you have, Mohan. We have seen that after a long haul of consolidating and being facing the headwinds, the auto sector is finally reacting to the good news. Since last 1 week, we've seen many stocks jump up anywhere between 10 to 30% odd as well. Many have started to hit record highs, especially even the larger priced stocks like Maruti Suzuki too. You're sitting on profits on TVS Motors, so congratulations on that. Akshay, how would you advise this one? This will be a question that many of our viewers will have.
Yeah. So look, from a longer term perspective, this chart has been confined in a trading range. Now, this range is pretty big because we're talking long term, and really, the best way to study this chart is to average out. Because if the longer term price charts have to be studied, still the charts are not weak. It is just the 1.5 year version of the chart reading which shows a range bound trading. So you can look to average out. The range to average is from 560 So yes, it all depends on how you are looking at what time horizons you are looking at the market frame, because majority of auto stocks have reacted on the GST news, and as we all know that markets always are a couple of steps ahead and works on sentiments. So sentimental push is what has seen a positive reaction in the auto names in the last few days, and it's at the time when actually the GST implements. Now is the time when you get the orders going, the numbers or the auto numbers picking up, but the reaction has already happened. So you might get into a phase where there might be some temporary profit booking or slight bit of a temporary correction, and if that really worries you from a short term perspective, it's better to take 50% profits off the table. We're not talking about any reversals, any major corrections. It is just it's time bound, short term. Overall, if you can give time minimum 3 months plus horizon, you're looking at hard numbers, looking for targets beyond December 2025, then possibly 3700 plus is where TVS Motors can move up to. There is a strong consensus support at 3300. So book profits or short term profits if your time horizon is short lived. If you can wait for December 2025 plus, then 3700 plus should be your targets.
Okay, fair point. I hope this has answered your question well. Let's take the next one. This one is again from one of our other viewers, Anuj Singh. He says, "Good afternoon, ma'am. I want to know about Bellrise Industries. That's a recently listed stock. So, Akshay, it will be difficult for you to look at the long-term charts there.
Yes, absolutely. The outperformance can continue. So limited data is one restriction I have, but the thought is post listing the volumes have been very strong, and the stock has never looked back after its listing date. So it's been a one way healthy uptrend, which is a very strong characteristic of further upsides to continue in the days to come. Recently, there is what I understand is a positive bullish saucer formation, which on the technical risk management you can keep stock below 140 and hold for the targets which I mentioned.
Okay, got that. Let's take the next question. This one is from Satyan. He says, Akshay sir is my favorite. Please do ask him my query for sure, Satyan. He says, I want to really thank him for the bottom of my heart. I've been holding office since last 15 months. My buying price is 660, office space solutions. He wants to know what exactly should he be doing right now. The best solution to make up for a 10% loss and at least get a 10% profit also in the next 6 months. So a 20% from the current rally, a potential over the next some quarters is something that he wants to know from you, Akshay, on office space solutions.
Yes. So first of all, thanks for the kind words and for office space solution. If you can just give me the code because I'm not able to figure it out on the chart. So yeah.
Okay, for sure. I'll give you the quote as well. 1 second. Um, this is one of the recently listed shares, and I'll just quickly pull out the stock for all of your benefit and, of course, for the key. So it's AWFIS. That's how it is spelled, even on the NSE.
AWFIS. Yeah.
That's right.
Yes. Uh, I think this talk is positive. You need to give some more time. Unfortunately, it's been, I think, over 1.5 years that the stock has been range bound. There has been loss of momentum. Volumes are a bit slow to catch up, but still there is no negative signs on charts that you need to take an exit. Continue to hold. What my understanding is 550 is a short term or next 1.5 months support base, which is a concrete evidence that the stock has formed a short term bottom. Any stop losses should be below 550. And if a recovery picks up from the current levels, 800 or 850 from a medium to longer term perspective is the target area you can look forward to.
Okay, got that. Let's take the next one. This one is from one of our other viewers who's joining in on our YouTube channel. This is Manoj Pai Kapadia. He says, good afternoon. आज मैंने GMDC के 100 शेयर्स बाय किए हैं 613 में. इसका आउटलुक पूछना चाह रहे हैं आपसे, अक्षय.
देखिए जीएमडीसी रिसेंटली लाइमलाइट में बहुत है. एक तरफा अगर मंथ ऑन मंथ एक्शन देखे तो 400 से 610 का मूव हमने देखा है.
जी।
और इस स्तर पे अगर आपने बाय करा है द हाईएस्ट पॉइंट, तो कहीं ना कहीं तो रोक टोक होगी, रुकावट होगी, बिकॉज प्रॉफिट बुकिंग कभी भी आ सकता है, क्योंकि चार्ट्स पे बहुत ही हाईली ओवरबॉट है। हल्का प्रॉफिट बुकिंग में आपको परेशान नहीं होना है, क्योंकि आपने थोड़ा सा टाइमिंग हायर लेवल पे करा है, तो और थोड़ा करेक्शन डीपन हो सकता है 575 580 तक। कोई डर वाली बात फिलहाल नहीं है। स्टॉप लॉस आपको 540 का मेंटेन करना है, और अभी भी नेक्स्ट राउंड ऑफ मोमेंटम बचा हुआ है स्टॉक में, ये मेरा मानना है। तो 670 680 रफली एक टारगेट जोन रहेगा आपके लिए, जहां पे आप एक बार अपना प्रॉफिट बुक कर सकते हैं।
Okay, got that. Let's take the next one. This one is from, we have another question coming in from one of our other viewers who's joining in again on our YouTube channel as well. A lot of our viewers are joining, in fact. The next one we have is from Sheetal Agarwal. She says, could you please share a view on Jindal Saw? How would you look at Jindal Saw and outlook long term?
Uh, Longer term, Jindal Saw has seen a round of correction. You can say it's almost a one-way corrective action, which we have seen the stock unfold from the levels of 375. But the positive news is that on the technical price charts, 200 is a very strong support zone. The stock has shown an intent of recovering from the levels of 200. So need to give some more time. In all probabilities, the way the price setup goes up, there is a good chance that the stock should stage a recovery, where possible targets work till 275 to 290. Maintain a strict stop loss of 190 on your buying trades, and try to look for exits around 280.
Okay, got that. Let's take another one. This one is from Bhaskar. He says, sir, can I purchase Paras Defense at the current price? Now, we do know that defense stocks had been lying low for some time, but there's some move again happening on the space as well. We are looking at the large caps, HALBL, shipbuilders are also coming up. There are several order flow news that have taken place over the last 1 month that have kept these stocks in visible radar as well. How would you look at Paras Defense? That's been an outperformer as well.
So defense stocks recently have shown a good recovery tendency. Now I say recovery because the majority of the stocks had been beaten down, highly oversold on price charts, and there is a phase when suddenly these stocks get back into the limelight. But really, at this point where Paras defense trades, I'm not saying it's going to be weak, but it might spend some more time in a range bound price journey. So roughly 550 from a medium to longer term perspective is a very massive support. The chances of prices going below this look very bleak. It's pretty far from where we are right now, but we are talking more from an investment perspective here. So be open to averaging around 650 if you do get a chance. Overall, from an investment horizon, you can see the stock moving once back to levels of 900, but from a longer term horizon.
Fair point. Noted that as well, Akshay. Let's take the next one that we have. This one is from one of our other viewers who's joining in again on our YouTube channel. Okay, we have this question from Satyanarayan Rao Kulkarni. Wants to know about an interesting question there. Swiggy versus Zomato. What should one look right ahead of the festive season? Well, good question there, Satyanarayan, and that's the key question to find out whether we do know that the entire benefit will be seen of GST cuts, of festive shopping, and of order flows on food as well to the industry wide as well. But the key question is, how do you decide which one is better at this stage? So Swiggy 439. It's also in news because of its Rapido stake sale today. So it's down by about 2.2%. Zomato 0.7% low at 335. How do you choose between the two, Akshay?
Yeah. Uh, Honestly, most of these consumer names have already had their move on the one is the theme which was in a few days back, the GST theme. Secondly, it's very common to that now the festival season demand will kick in, and there will be a strong demand for the consumer items. I mean, this is a very common thought, and things are not so smooth in the stock market that during this phase everything will move, because if you look at the price journey, majority of Eternals or Swiggy have had their fair share of move. So from anticipating further move from here looks a bit difficult. I will rather advise wait for a dip, because both these stocks are overpriced or a bit expensive on the price charts. I will wait for a dip. And if a choice has to be made between both, then I will stick with Eternal Limited, which is currently around 335. So the right price for me based on technical price is somewhere in the range of 310 to 290. In case you get these dips, those are good levels from a risk reward perspective where a good trade builds up. There is where you buy Eternal, keep a stop loss below 275, and that should be a good level for the stock to show a possible bottom and recover back again for possible targets of 350 plus from a 3 to 6 month perspective.
Fair point. Taking the next one then, we have this question from one of our viewers, Ankur Modi. He says, hi Sakshi, can you please suggest if BEL is a good purchase level at this point in time, and can it continue to become a multi-bagger over the next 2 to 3 years odd? Okay, so Bharat Electronics, one of the key names within the defense pack. If somebody wants to invest even at this stage, although it has run up from its low point quite a bit over the last 6 months odd, your suggestion on BEL at this point also, would you advise an entry?
Yes, you can consider from an investment horizon. Short term, do not expect any fireworks. The momentum in most of the defense names have already been digested by the market. So, short to medium term, I am more looking at range bound or slightly corrective scenario. Yes, 1 year plus 2 3 years, you're looking at multi bagger. Then technically, still the price trend is very strong in BEL. There is a support of 340 on the longer term charts, which is pretty far off from where we are. But from an investment perspective, considering all the data which in front of me, the price charts, the volume action, I think this is the stock to be invested in. Possible targets, if you want to keep a potential targets from a long term horizon, should be around 475 to 500.
Okay, got that. I hope this has also truly helped you out there as well. Let's also take one more question and then we'll jump to, Akshay's own choice of questions as well. Jay Shiv writes in, says he's a very big fan of Business Today television. He finds this show very useful. Thank you so much, Jay, for writing in. The question that he has is on the Adani stocks, Adani Total Gas or Adani Power for a fresh entry. Adani Group stocks have also had a good run up over the past few sessions right after the SEBI clean chit that the group has got in the Hindenburg case report. We've also seen many stocks rally substantially over the those 2 or 3 sessions. There's some profit booking that's taking place right now. How would you choose between Adani Total Gas and Adani Power?
See, honestly, both the stocks were in a range bound or negative downtrend, and the reaction or the positive news which came in 2 3 days back in the Adani group have been the trigger for the buy point in most of these names. The momentum has fizzled out yet again in the last couple of days, and the way the fizzle out has been, it is not a minor correction. They are almost back to square one, you can say. So really, both the chart structure, if I were to study, doesn't interest me much. I'll be more keen on an Adani Enterprise or an Adani Ports if the viewer is open to moving out and not restricting himself just to Adani Total Gas or the other Adani stock which was mentioned. I would be because both of them have more of a neutral setup. I will be more keen on buying Adani Enterprise, which I believe has still more room to go up from an investment horizon all the way up till 3200. There is a support at 2400, and I hold a positive view on the stock.
Okay, fair point. Let's take now, Akshay, your choice of stocks then. How are you advising clients at this point in time? Have you taken any fresh positions to take the benefit of the festive season, the ongoing one?
See, I think metal space is doing pretty well. Most of the names in metals have seen good long build-ups in the derivative space. The technical price charts are pretty strong and the momentum is good enough. So Hindalco is one stock you can look forward to with a 3 to 6 month horizon. There is a resistance at 760. The current market price is 744. But based on my price and volume readings, I feel this breakout should happen soon in due course of time, and we should be looking forward for targets near 800. You can maintain a stop loss below 715 on this buying trade. Second recommendation will be in SRF, which is around 2904 right now. There is technical evidence of a support base at 2800, and I'm expecting momentum to regain in the stock for possible targets of 3200 to 3300. Keep a stop loss below 2800 on this buying trade.
Okay, fair point. Let's take now another question that's coming in before we let you go. Let's quickly take a question on Genus Power that's coming in from Vinita. Also, Akshay, could you help us understand what's your outlook on this stock, Genus Power?
Genius power, I think it all depends what your time horizon is. Longer term is still strong. Short to medium term, it will be choppy, directionless. And if you're looking for price points where there can be some bit of a bounce back, there is support at 300 and the next support all the way down till 260. So short term, it's very difficult to exactly point out which way it will move because the volumes and price action is all across, all around. There is choppiness, no clarity on short term, but give some longer term, stay invested on a longer term horizon. 275 is your stop loss. You can accumulate between 300 to 325, and longer term, you can look forward for targets till 450.
Okay. Some more questions that are coming in. I think, we'll quickly take that. Akshay, we have this next question from one of our viewers wants to know on NTPC from the power space again. So after Genus Power, we also have NTPC as a question, but only for a short term. How are you looking at it?
See, NTPC has been range bound since last 4 to 5 months. Today, intraday, or rather, last 4 or 5 days, you can say there's been good momentum gradually building up. It's been more of a one-way move silently from 325 to 348. Today is the day where the stock is picking up traction because there is some technical breakout which I see on the intraday charts. But from a short-term perspective, I think you can look forward for targets till 370 on NTPC. 340 is the short-term support, and your stop loss should be 335 for targets of 370.
Okay, fair point. One more question, before we let you go, and this is specifically on the mid cap 100 index that we are getting, Akshay. So I have to take this up with you. Jatin Dave writes in and he says, I want to know about Nifty mid cap 100 index. How do you see the index performing, and by when can I expect 61,000 plus kind of levels?
So Nifty mid cap index is 58163 as we talk now. Uh, Technically, there is a very strong resistance at the levels of 60,000. Now, whether this breakout is happening before Diwali or after Diwali, that's because there have been, I think, 5 to 6 instances where the barrier of 60,000 has been pretty tough on this index. There is a 200-day moving average at 56,000. So in all probabilities, you can be invested or hold. 56,000 is your main support zone till the short term can be range bound 56,000 to 60,000. But if you are anticipating a breakout where obviously the long term charts are still strong, you can look forward for breakouts. But keep a stop loss below 56,000, and if the breakout is seen, which may happen before December 2025, then 65,000 targets open up very fast or very soon within a very short duration once the event of a trigger of the breakout happens.
Fair point. Actually, we'll thank you then on for being with us on the program, and for, of course, helping out all our viewers with solving their queries. Good to have you with us as always. Viewers, we're back above 25,100 odd mark, so we are seeing a pickup happen from the day's lowest point. Let's hope that we see more improvement towards the end of the session as well. Mr. Kranti Batini is now joining in, Director of Research at Wealth Mill Securities, to share with us his views on the markets and to answer some of your queries as well. Mr. Batini, warm welcome. Good afternoon to you. Good to have you with us. Help us understand, how are you looking at the markets? The festive spirit is pretty high. We are also seeing, on ground, the benefits of GST rollout taking place. There is a huge demand for the consumer durables to even auto segment at large as well. But the markets either seem to have priced in all the good news over the last 1 month and therefore are seeing some profits being taken off, or they are probably looking now to see the impact of these sales maybe in the numbers going forward from here. How are you analyzing the markets at this point, and what are you doing at this stage, sir?
Hi, Sakshi. Good afternoon to you. Good to be on your show.
Thank you.
Yes, Sakshi, at 25,000 level, what we are witnessing is, as and when the market tend to come about 25,500 level, we are witnessing some kind of a tightness in the market, and also in some form there is some kind of a extra pressure, that is selling pressure is getting created. Definitely, this is a market buy on dips and a sell on rally kind of a market. A lot of action is in the mid and small cap space than the headline indices are concerned. But as long as if Nifty could able to sustain the range of 25,000 level, the medium to short term, the market direction is a positive territory. The missing part in these markets are participation of foreign portfolio investors. They have been slightly skittish with respect to Indian markets at this point of time. The entire show, thanks to the domestic liquidity by DIS and the retail investors are concerned, they have been holding the markets to be in a positive territory. And also, some concern is the depreciating rupee, which can be weighing on the market on the sentiment in the medium to short term. And IT as a sector, we witnessed the double whammy for them. So this kind of a extra pressure is getting created on the markets. But my sense is as long as the Nifty could able to hold the range of 25,000 level, the direction for the market is in a positive territory. And Sakshi, this is the market for by and large for the trading traders and delivery based traders. It's definitely a buy on dips and any sudden spots and spikes to book profits also in the medium to short term.
Okay, fair point. I hope this has given a broad understanding to all our viewers there. Mr. Batini, we'll start off with taking some questions that are coming in from our viewers. We have a lot of questions that are coming in on our WhatsApp, so we'll start taking them. We have this question coming in from Priya. She says, Kranti sir, I want your suggestion on Lloyd's Enterprises. How do you see this stock, sir?
In terms of the current GST, definitely helps the stock for a medium to longer term. And Lloyd's Enterprises, with respect to the steel is concerned, steel stocks have been resilient. And Sakshi, one thing we need to understand is when there is a bullish nature with respect to auto space, the another sector directly that takes the advantage is steel, because the automobile consists of 70 to 80% steel. So there can be an inherent advantage for them. So she can hold on at this point of time. Copper and steel, they're going to do well because of the GST reduction, and also the infrastructure space because of the reduction of GST on cement can boost the infrastructure space. Directly, steel stocks are going to get benefited. She can hold on.
Okay, hold on, that's the view. We have Ramakrishnan now asking his question, says, I love the way this show is conducted. Thank you so much, Ramakrishnan, for watching our show regularly. I hope this is truly benefiting you out. The query that he has sent today, Mr. Batini, is that he has 4 lakh rupees to invest in the stock markets and wants to know, for the next 6 months to 9 months time of a horizon, any key stocks that you could advise him where he can enter into and therefore take the benefit of the investments at this point as well. He has also thought about some stocks and where he wants to know your suggestion that could he look at a Trent, Adani Power, BEL or Canara Bank. Any of these stocks that you prefer for over the next 6 to 9 months from what his choice of stocks is?
Actually, we don't know exactly his risk appetite. Of course, he given the
Yes.
time horizon. So BEL and Canara Banks looks attractive at this point of time. He can buy them at dips, and the remaining other slightly high risk appetite investor, if we want to take some high risk kind of venture into kind of high risk appetite investments, he can do. But BEL and Canara Bank, he can accumulate on dips.
Okay, let's take the next one. This one is from Dodhya Chandra Singh. He's from New Delhi. He says, I want to know about HBL Engineering. I already have the stock in my portfolio, 25 shares bought at 421. I want to know about a 3 to 4 year time horizon on HBL Engineering. Is it an advice that I should stay put into this stock, and what kind of a target can I expect over the next 3 to 4 years?
Sakshi, this is the stock which witnessed a fabulous rally in the past 3 to 4 years. In fact, if we check how the stock has moved, it moved around from 50 rupees, it moved to currently after touching 900 levels, it's consolidating around 800. Yeah. So the stock can be maintaining the same kind of pace? I don't think so. Okay, the best of the times are priced in at this point of time. If the company has emerged around 22,000 crores market cap, it has the advantage from the railways and also the power sector that has been helping the stock. So if you have a time horizon, okay, he can hold on to the stock and try to accumulate, but he need to have the expectation has to come down, because if he is expecting the similar kind of delivery what it delivered, I certainly doubt. But it's a good stock to hold on and expect 10 to 15% CAGR return from this level, which is fabulous still.
Okay, got that. Taking the next one then, we have this question from Sharath. He's from Bangalore and says, please suggest a future outlook about GAIL India for the next 4 to 5 years, and is it good enough to buy at the current market price as well? So from the oil and gas space, GAIL or Gas Authority of India Limited for you, Mr. Batini.
These stocks looks very attractive in terms of the valuations are concerned, Sakshi. But the problem is the cyclicality of these stocks, and also the PSU stocks have been in a long consolidation phase. But if the investor have a time horizon of 3 to 4 years, definitely he can start by accumulating the stock and need to have a moderate expectation from these stocks. But still, they can deliver 10 to 12% better returns on a CAGR basis.
Okay, got that. Let's take the next one. This one is also from one of our other viewers, and this is Rahul Singh. He says, good afternoon sir and good afternoon ma'am, I am from Singrauli in Madhya Pradesh. Welcome to you, Rahul, good to hear from you. He says, I have bought Cross Limited shares in my portfolio. I bought this at the rate of 236. My view is just about 2 months. What would you advise here on Cross Limited?
Sakshi, since he is with a short-term horizon, okay?
Yes.
He need to have a stop loss. He can keep at 200, but recently auto ancillary and auto stocks have been doing well. So have a stop loss around 200 and he can hold the position.
Okay, got that. Taking the next one. He says, we have a question from Prabhat Singh who says, सर क्या टाटा टेक्नोलॉजीज में फ्रेश बाय कर सकते हैं 1 year के टाइम व्यू के साथ? Now Tata Technologies is an interesting one. You know, investors really bought big into this space, thinking that this is one IPO from the Tata Group that's come in after 3 decades, and therefore it could probably replicate TCS wealth creation as well. But so far, it's actually not performed to the T. How would you really look at the stock now?
Sakshi, I just reminiscence, okay, the kind of euphoria was there at the time of the IPO, and everybody eagerly waited for the IPO when it got listed, when the and when it's in a consolidation phase, everybody afraid to touch at this point of time. Given the kind of the current outlook for the automobile sector, what we are witnessing, definitely Tata Technologies is going to get benefited. If the investor have a horizon around 2 to 3 years, he said just for 1 year, but if he can enhance his time frame when and the time horizon, definitely one can start accumulating Tata Technologies at this level. The stock looks very attractive and it's going to get benefited with the euphoria and momentum in the automobile sector is concerned.
Okay, fair point. I think we have to now wind up the show. So thank you so much, Mr. Batini. Always a pleasure to get you with us on the program and to have you answer all the queries that our viewers have. Thank you so much, viewers, for constantly sending us your queries. We have to wind up because we are now going to be joining with the top management of Anand Rathi Shares and Stock Broking IPO that's underway. And of course, that's something that you would love to hear from the management as to what do they envision for the company's growth profile going forward. So stay put for it, coming back shortly.
A very, very warm welcome to you, Dr. Klinger Vidra. As we begin today's fireside chat on the world of startups, for everyone to know here,